is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A sixth bearish black crow yesterday and the lowest close since early 2017. Indeed, what halted the decline on a closing basis was the combined February and March lows from 2017 at 104.92. Overall, we are still within the two bearish Andrews pitch that I had previously mentioned. The original January to May 2021 bearish Andrews pitchfork is still driving this market lower, having run now for almost a year. We're approaching the lower time currently at 104.15. And the more recent mid-February to end of March bearish Andrews pitchfork for steeper bearish angle of attack. Here we are approaching the middle time currently at 104.14. What is significant about these two right now is that the tines have just crossed. And though they are not directly related pitchforks, it is still worthwhile to watch out what happens when tines cross, such as a change of direction or a reinforcement of direction, and overall a potentially more volatile period. So far today, a pullback up from the combined February and March 2017 low. This may well be related to the tine crossovers as well as nearby support below at 104.51. Cable, aka sterling against the US dollar. A sixth bearish black crow yesterday and a dip and close below the congestion based around the 38.2% Fibonacci line of the March 2020 to June 2021 move at 124.89. This is all a continuation of the move down from the recent late February to mid-April descending triangle pattern. The initial target X for this pattern is in the 126.55 area and has already been achieved. The market now seems to be trying for the harder secondary target X1 in the 123.60 area. So far today, a reactionary move back up over the 38.2% Fibonacci line and currently looking like a possible double or even a bullish engulfing pattern, if only just. Euro sterling. A large, long-legged, indecisive spinning top yesterday, which was interesting as the day's range encompassed what has become this week a large period of inter-day indecision between just over the declining medium moving average, currently at 83.75, and just below the April 2021 low at 84.70. Into this mix has seen the declining long moving average enter, currently at 84.44, engaging the market from the top side as well. However, the falling September 2021 to date downtrend, currently at 84.81, may be having a greater influence as it is seemingly standing as a proxy for a possible extended diamond pattern that has been in formation since the start of 2022. I'll speak more about this if it happens. This has seemingly taken over from the previous pattern, the very large falling wedge pattern that I had detailed many months ago. So far today, a slightly higher open, but then the market has spent a lot of its time back below yesterday's open, coming back within yesterday's open and close, just below the open at the moment. US dollar against the Indian rupee. An immediate countering bullish thrusting pattern as the market is seemingly hesitating over the very recent 50% Fibonacci line at 76.20, as well as the 61.8% Fibonacci line at 76.43 and the June 2020 high at 76.39, but below the 2020 high at 77 even. In the big picture, the market is still traveling higher, well, sort of, in between the lower time, currently 76.13, and the middle time, currently 77.58, of the January to April bullish Andrews pitchfork. This pitchfork is seemingly showing the bullish angle attack of this market, but as yet we have not seen the lower or middle time really being tested. So far today, a lower open and a move down below the lesser Fibonacci line at 76.43 and the June 2020 high, but not as yet down to testing the 50% Fibonacci line at 76.20. US dollar against the Brazilian real. An unusual pattern yesterday, especially because of where it is situated. It is most definitely an indecisive spinning top, but it could also be seen as a possible inverted hammer pattern, as well as a possible spike top. These latter two are usually seen as bearish. Overall, the market has moved away from trying all the way down to target X in the 444.20 area, the potential target area for the 2020 bearish halfway hesitation pattern. It seems that achieving something like 80% of the distance to the target area has been enough. Indeed, the market is seemingly hesitating just ahead of the congestion between 5 even and 520 even that formed the core of the 2022 bearish halfway hesitation overhead. US dollar against the Mexican peso. An interesting pattern yesterday. An indecisive spinning top that could also be seen as a bullish double. I can fully understand the hesitation in recent days, as overhead we have a slew of resistances. We have, and this is in no particular order, the long moving average currently at 20.4190, the medium moving average currently 20.4312, the neckline, well, you should watch these two as we may have a dead cross on these moving averages. Anyway, the neckline of the currently 20.4545 of the September 2021 to March 2022 head and shoulders top. Then the interesting 61.8% Fibonacci line of the July 2017 to April 2020 move at 20.6062. And finally, the upper time, currently 20.6987 of November 2021 to March 2022 bearish Andrews Pitchfork. We also have the nearby targets X2 in the 20.4960 area and X3 in the 20.6605 area. These are not resistances, but initial, primary and then secondary targets for the late March to late April double bottom pattern. Target X2, the primary target, was achieved earlier this week. The target X3 is still available, though, as I've already mentioned, the market will have to punch up through a lot of resistances to get there. Looking below, we have the flatlining short medium moving average currently at 20.3115 acting as a support right now. But we have little beyond that until we hit the top of the previously mentioned double bottom, and that's starting at just below 20.20 even. So far today, not much. It's caught between the resistances overhead and the short stroke medium moving average below. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.